So everyone, I just took the stream live, so you're probably starting to join in. First and foremost, I think we all should say thank you to Miko for hopping on. I imagine your schedule is super packed with high-level, high-minded conversations all day long, and to spend 30 minutes with us definitely doesn't go unnoticed. So thank you, Miko.
Sure, appreciate it.
So I think first and foremost, maybe we should just kind of set the table a little bit. Miko, I'm going to try, and I'm going to give you an introduction.
Yep.
And then you let me know how good or bad I do at the end. Okay.
I'm sure it'll be fine.
All right. So today we're joined by Miko Matsumura, General Partner of Gumi Crypto. It's a Silicon Valley crypto startup fund, approximately 400 million in assets under management. Miko has prior stints with Sun Microsystems. He has raised a ton of money for development platforms and financial infrastructure companies. Currently is an advisor for Celsius, Idle Finance, Pundi X, Keyless ID. And if that wasn't impressive enough, he also has a master's degree in neuroscience from Yale and may or may not be the world's greatest Chun-Li player in all of Street Fighter.
I like that. That's good. I like that.
Did I miss anything in there?
No, I think that's good. I mean, Gumi, my fund has been seed stage investor in a number of things, including Yield Guild Gaming, as well as OpenSea, and early stage investor in a bunch of other DeFi and CeFi and even infrastructure opportunities. So we've been working with a lot of really great founders.
Yeah. Well, what's cool about that too is your group was kind of working in the space before it was trendy to do it,
Yeah, it definitely was a little less crowded than it is now. I'll put it that way.
Yeah. Okay. So just, I guess, also to kind of level set. So I shared a little bit with Miko, but obviously my name is Ryan, no autopilot YouTube channel. I started this channel in March of 2021. I had a long career as in essence, a territory manager for a Fortune 500 company. Due to COVID, directions, you kind of get pulled in different ways sometimes, even if you don't see it coming. And I decided to try and tackle creating a fundamental research, poor man's venture capitalist YouTube channel. So that's kind of what we're trying to do here. All right, Miko. So before we kind of get into some of the hard hitting questions, I thought maybe we should throw a couple softballs at you. So the first one is, can you share what your proudest moment in all of your time in crypto has been?
That's a great question. I would say probably my proudest moment was maybe this most recent round raise from Celsius Networks. That was a pretty exciting one because I was a advisor since like pre-ICO in 2017. So I definitely had been watching and trying to help out these guys since super early days. I did manage to kind of introduce them to someone representing the lead investor in the round, Westcap. And so, Westcap ended up leading the round. It was a $750 million round. I don't think I'd ever been a party to raising a round of that size before. And, it definitely is one of the big ones in the crypto space. So, that was definitely an exciting time. Obviously, there's been some other really nice portfolio performers, but that one I think had a really good personal feel to it.
That's awesome. It's nice to have that personal story where you're supporting the project as an advisor, and then being able to kind of see it through fruition to that size of a raise is pretty rare, right? I mean, pretty respectable too. That's awesome. Okay, so the flip side, can you share with us, and I'll share mine too, but most painful lesson in all of your time in crypto? Just to be honest, right? I'm not a rock star crypto YouTuber. At one point, I thought SafeMoon was a really, really smart decision.
That's good. I love the transparency. I definitely love all of that. For me, like probably some of the really easy ones to kind of regret are, the ones that got away. I spent I spent like a full day up in Vancouver doing diligence on Dapper Labs. This
Oh
was
yeah.
obviously all the way back to CryptoKitties, but this was kind of right before they launched NBA Top Shots. But they had already been kind of pretty much nailing down the crossing the T's and dotting the I's on the NBA contract. So like, in a sense, like it was all set up for me, so that was one where everything was super clear. I saw them as kind of an A team. So like that was, the thing I didn't quite understand is what an A+ team looks like. So, I was a little confused by some of the things they were doing, but like, in a sense, like what I learned the hard way is that, an A+ team will kind of deliberately stretch, like they'll deliberately be doing things that they haven't mastered, in order to kind of master them, right? And one
Right.
of the things they'd been talking a lot about is kind of Netflix and how Netflix kind of evolved, right, as a platform technology company, and they went from being kind of a mail order DVD company into being kind of what they are, right? And if you look at the name of the company, the mail order DVD company wasn't called DVD mail, like it was called Netflix, right?
Right. Right.
So they probably had the vision, right? But like
Mm.
that evolution's non-trivial, right? So in a sense, like, I should have really read the situation better, right? So that was kind of one where I was like, okay, wow, like, you missed it. It was all in front of your face, and you missed it.
Yeah, I mean, it's kind of like you had the same role that they did, though, right? Where even in that experience, there's an opportunity to learn and take something forward into future conversations and future deals.
Yeah, absolutely. I mean, to me, like you absolutely, that's one of the things that's so important is, like life lessons, right? Like you have to kind of really scrutinize yourself and just be, as neutral as you can be, right? So you don't want to be like hyper blaming and look at yourself, like in a negative light, right? But nor do you want to kind of look at yourself in a positive light and kind of let
Yeah.
yourself off the hook, right? Like you
Right.
want to look at yourself in a very neutral light and just be like, okay, like, how could that have gone a lot better? you know?
Yeah, I think that's really hard to do. Not to get kind of too far off track here, but I've never attempted a feat like YouTube before. I just knew that I enjoyed researching things, and I thought maybe other people would too. But yeah, after a year's time in this field, it's easy to see in the numbers that there's a lot of opportunity for development still. A lot of opportunity. Okay, so kind of dipping our toe into some of the portfolio strategy and investing stuff, and I'll say, from my standpoint with my community, we really value due diligence, but at the same time, I feel like we only know what we know, and that was one of the reasons I wanted to reach out. Is although we can read Medium articles, watch interviews, see how projects prosper after the fact, you in your experiences, you oftentimes get to see those things before the entire world does. And I'm not looking for, and I don't think we're looking for, like a secret bullet or anything like that, but just some ways to guide us in down the right path, if that makes sense.
Yeah. I think one of the wonderful things is this, right? Which is that, all signal is relative. And what I mean by signal is relative, right? Is that like, the more signal you have in venture, kind of the more proprietary and high quality deal flow you get, but it's all relative, right? There's always people that are getting more signal, right? And the thing that's amazing is that there are these wonderful stories in venture. Like, for example, like, the sharing economy deals, Airbnb and Uber, like those are stories of just people didn't believe it, right? So
Right.
in a sense, like those are wonderful opportunities for anyone, right? Because in a sense, like they pitched everyone and everyone turned them down, right? So even if you don't have proprietary deal flow, like there are just these amazing entry points that you can kind of find where you can find these just amazingly contrarian opportunities, right? So I think every field has like significant potential, right? So you just need to kind of find the potential in your field, and then you can advance.
Yeah, I love it. Okay, so down that path, what I've done, and we've kind of looked at GameFi in particular over the last couple weeks, right? I realize that it's unlikely that I'm going to go ahead and kind of pick the winner in the space. So rather, we've looked at some of the top GameFi games that are out there, Star Atlas, Gala, some of those. And then we've bookended them with infrastructure pieces, right? Like layer 2 scaling, Immutable X, Matic, even blockchains like Wax. Hopefully your blockchain project at some point, once that comes out. But again, it's kind of the focus of 20 to 25 different projects, expecting over 50% of them or so to return less than what we put in, another percentage to kind of maybe tread water, and then single digits to hopefully carry the entire portfolio.
Yep.
What are your what are your thoughts on my poor man's VC approach to trying to kind of cast a net over GameFi?
I love it. I think it's very, very thoughtful. One of my favorite books about angel investing is the book called Angel by Jason Calacanis, and he talks about kind of sufficient diversification, right? So you're definitely taking an approach of diversification. I think the two things I'm noting that I really appreciate is one of them is kind of sector diversification, right? So you're really looking at it from a subsector perspective, right? And I think one of the things that is really important is that when you think about things like infrastructure, right? To me, like when you think about infrastructure and applications, the relationship between these two things is so intriguing, right? So because I looked at a map of secondary sales of NFTs based on platform, and it's so interesting because when you look at the chart, in the beginning, there's only Ether, right? So it's like, oh, Ether has them all, right? And then all of a sudden, Wax started showing up, right? And it looks like Wax kind of was tied to like MLB, right? And then all of a sudden, you start to kind of see like Flow, right? And of course, Flow is NBA Top Shots, right? And then you start to see Flow, and Flow starts to kind of like get a little bit smaller, and then all of a sudden, you start to see like Ronin, right? And Ronin starts to grow. Right. And of course, that's Axie, right? And so the point I'm trying to make is the point that like when you think about the relationship between infrastructure platforms and applications, right? In the current sort of shape and size of the market, like a single application, if it's strong enough, can just drive an entire platform, right? So that's so interesting because when you actually kind of look at things like the history of kind of the $1 trillion, megacorn companies, and up to even 3 trillion now. The thing that I think becomes critically important to understand is like a lot of them are killer applications on top of platforms, right? So if you look at something like Amazon, there's like a bookstore, eventually became an e-commerce store, right? Sitting on top of AWS, right? If you think about the evolution of something like a Microsoft, so Microsoft and Apple belong to a different generation, which is the Moore's Law generation, right? So those two are in the 3 trillion cohort, right? But if you look at the eventual evolution of Microsoft business actually looks like a bunch of AAA quality games, a cloud infrastructure platform, and then everything else. Right? That's what Microsoft looks like right now, which is an amazing evolution from where they started.
Well, and maybe I do a bad job about this, but typically when I see a project that's kind of stepping out of what I know them for, it makes me uncomfortable, right? Like, because it's not proven there.
Pivot.
Yeah, I guess. Yeah, right. Pivot. Yeah, but I think that's interesting. So circling that back to crypto, then I guess it'd be almost like your project with YGG, right? So it started out as a DAO, and now they kind of have an investment arm. They have products and services that now they're extending to games and other DAOs. It's almost like that at a much smaller scale.
Well, one of the most kind of explosive insights about YGG was actually that you can even get value accrual at that layer, right? So the thing that's so insane is if you think about it from a thesis perspective, right? The thing that's so fascinating is you can look at the network layers. So people talk about like layers 1 and 2, right? Which is kind of infrastructure layer, right? And then above that, you kind of have even middleware, right? So you have middleware layers. Like my fund has been really actively investing in kind of NFT middleware, whether it's like Solve Protocol with their vouchers, or we just we're really exploring kind of the rental NFT protocol middleware,
Mm,
lit protocol, which is sort of access control and security middleware, right? So there's a lot of opportunities to kind of delve into that kind of middleware layer, right? But then above that, there's kind of an application layer, right? So you look at things like Axie and games, and everything's kind of up there on the application layer, right? But the thing that's so intriguing about what happened with YGG is YGG demonstrated that you can actually develop a aggregation of value capture that exists at the level of humans, right? And so,
mm,
this is actually pretty novel. And I think one of the clear insights is that, like, I talked about sort of Moore's law, right, which is an exponential law of technology, which has to do with the doubling of transistor density, right? That drove the creation of Apple and Microsoft. But it turns out there's an entire cohort of companies that reached $1 trillion valuation that are kind of the Facebooks of the world, right, and the Googles, right? These are all part of a different cohort, and this cohort are actually the Metcalfes Law cohort, right, which has to do with the network effect, right? So they're network effect companies, right? So the thing that's so intriguing when you look at crypto is, I believe that crypto resembles more like an accelerated Metcalfe's law. And the reason why I call it accelerated is that the network effect, which is the value of the network, which rises exponentially, the value rises exponentially, is distributed amongst the users, right? And so what
mm.
happens as a function of that is it becomes autocatalytic, right? What it means is it means that people who join a network tend to kind of shill the token that they,
Right.
because they're part of the tribe, right? They join a tribe, right? So that
Right.
that
Right.
so because of that, the idea that there's a tribe, right, that you can call like a gamer guild in Play to Earn, right, becomes a really logical layer for value capture, right? So that insight is very explosive, because as soon as you start to kind of reason about the world that way, you start to see sort of the rise of the DAO and the rise of the guild as kind of something that potentially has a novel scaling factor from an economics perspective, right? Because in the history of technology, people are like, oh, well, you can build a defensible moat using technology, right? You can do infrastructure, you can do middleware, you can do applications, right? But the idea that you can do DAOs or tribes or guilds, like, I think that's new. It's a new phenomenon.
Okay, so I'm not gonna lie, and I bet no one else on the stream is gonna lie either. There's a couple things you mentioned in there. I'm gonna have to go back and research.
Yeah. I'm just trying to drop enough alpha that you can kind of chase some of this down. And
Yeah. So okay. So with Metcalfe's law.
yeah.
So correct me if I'm wrong, but is my understanding of that correct? Where as people begin to use something, the engine or the pieces that provide that value, provide that service, have to scale in relation and exponential, right? So it's like a self-perpetuating machine almost at that
Yeah. So
point.
Metcalfe's law is a value law, and it means that the value of a network is proportional to the square of the connected nodes, right? So it
Mm,
means that it's exponential in the sense that if you connect one node, right, you actually have to square the connected nodes to get the value, right? So that's a proportion, right? So the thing I'll give you the trivial example, right, which is if you take something like a telephone, right, the owner of the first telephone doesn't have anyone to call.
right. Right.
So the value is basically zero, right? So if you
Right.
connect a second node, it's like, oh, that's so valuable, right? But
Uh-huh.
then you can only call one person. So it's sort of like, wow, that's really annoying, right? And then you connect a third person. It's like, wow, I can call two people now, right? So it sort of
Ah.
so the value starts to rise, right? The other thing that's kind of novel about a network effect is it creates sort of a moat, right? Because it creates sort of stickiness, right? That was the
Yeah.
Facebook insight.
Yeah, and I mean that that stickiness is definitely there when you look at different crypto projects, right? Like I find if I invest in something, if I go through the effort of investing in something, uh, it's it's relatively unlikely I'm going to go ahead and flip that anytime soon. For especially for like GameFi projects where you actually own the NFT, you have to go to the marketplace, you have to haggle with people on it. Like I'd rather just keep it and maybe use it for a scholarship or something like that. Definitely a lot of stickiness.
Yeah, there is a lot of stickiness. I would say that the force that is a counterweight to stickiness within the kind of realm of crypto is more like vampiric effects,
Mm,
right? So vampiric effects are kind of anti retention, right? In the sense that what you're seeing now, for example, in the DeFi segment, is you're seeing kind of a lot of what you characterize as mercenary capital
Yeah.
or disloyal capital, right? So
Right.
people are, yeah,
Yeah.
people are just hopping from farm to farm, right? And they just go to where the emission is, right? But the thing that's
I feel like you're
problematic,
attacking me personally.
the problem with full degen, mercenary capital is that their goal is to not be the greater fool, right? So it's a very
Right.
cynical way, because
Right.
in a sense, like as soon as they get your token, they're gonna convert it into stables, right? Because they just want to hold the thing that, they don't want to hold your thing, right? They
Right.
don't have any
Right.
loyalty to your thing.
Right.
They're just waiting to leave, right? They're just like, I'm gonna take the rewards that you're giving me and I'm gonna convert them so I can get out of here, right? So it's very, very that's the state we're in.
Okay, so I have a follow-up question on that then. So I've seen that in DeFi, and I wonder what your thoughts are in terms of seeing that same thing repeat itself with GameFi.
Yeah, 100%. So to me, the concept of play to earn is replicating the problem in DeFi, right? Because
Okay, yeah,
if you look at DeFi is play to earn, right?
right.
And so because if you consider interaction with DeFi to be playing, right? Then if you ask the person, why are you playing DeFi? Right. And there's only one logical answer. It's like, why would anyone play DeFi? Right?
To win.
They're playing to earn.
Yeah.
They're playing to earn.
Right.
That's what they're doing. Right. So as soon as you play only to earn, then you have no loyalty, right? Because if you can earn somewhere else, then you will, right? And one of the things that's the dirty secret in both DeFi and GameFi is that the majority of the yield is actually coming from money printing, right? So that it just means that what can happen is that there's first you print money and then you emit, right? So emission is basically like the process of dumping the money into the market, right? So in a sense, what a proper degen should do is just chase emission, right? It should be like, oh, there's lots of emission over here, right? And so then, they should just scoop it with both hands, right?
Yeah.
But they should never hold the bag, right? Like
right.
They should, as quickly as possible, they should be getting out, like they should start getting out as soon as they get in, right? So that's heavy degen.
Yeah, man. It's a wild conversation. I've had a couple, either AMA type styles or just one-off talks with game developers, and that consensus around the value of community, not token holders, although that goes hand in hand, but actually people who care about the project, who are helping develop like the roadmap, feedback loop, all that is more valuable than I think at any other point in game development history.
Yeah, I think the thing that is magnificent about that as a kind of a theme, right, is that in a sense, the thing that I've been harping on lately in gaming is I've been harping on what I call economically recognized entertainment value, right? And if you think about economic recognition of entertainment value, like in a sense, like if you think about the idea of someone who's part of your community, they're like helping to steer, they're writing some of the mythology as fan fiction, they're kind of helping make key decisions. They're like, oh, well, what's going to be more powerful, like a Scout Class 3 or a Corsair, like what's, they're just getting really into all of it, right?
Yeah.
And like that person's being entertained. Right?
True.
Like that person is being entertained, right? And just even the process of like hanging out and like talking about like this exciting game that's going to appear in the future, that's entertainment. That is inherently entertainment, right? So they're being entertained, and then they're part of an immersive world. Right now, is there even one computer model, or is there even one kind of like high fidelity rendering? Maybe there isn't even one, right? Like maybe it's just talk. Maybe you're just talking. But like, can talking be entertaining? It could be, right? And can talking result in you buying an asset? I mean, in a sense, like reading, talking, looking at stuff, like that's all there really is. Like that's all investors actually ever do, is they just read, talk, and look at things, right? So like in a sense, like that's almost a game unto itself. I think that's kind of some of the insight around things like Star Atlas, right? Because there's been a lot of community engagement, and people are super excited about being a member and being a part of that community. So I think that, and to me, like community is real, and it's a word that gets abused, right? Like people abuse that word because the community, the cynical word is the bag holders that shill your token.
Right. Yeah. For like meme coins and shit coins and stuff.
Totally.
Yeah.
Right.
Yeah.
They're like, oh yeah, community. And, and the community manager becomes the person who sort of spams everyone with like, your
Twitter raid time. Yeah.
Yeah, exactly. Right. So that's the community manager. Right. But like, to me, like there is a sustainable point where community is real, right? Where people are, and in a way it's about kind of fans and super fans, and it's really about kind of like creating immersion, and you create an immersive world. And it's kind of like, do you need a VR helmet to be in an immersive world? Not necessarily, right? If you read a really good book, you're in an immersive world, right? You're like, this is really immersive. Like, you're just living that reality for like weeks as you read through this book, right? So it's, that's entertainment, and it's entertainment that could be tied to economic recognition, right? People, maybe someone wants to buy one of these spaceships that don't exist. Like, that could be good, right? That it's good for your economy.
Man, Miko, you're dropping so much knowledge on here. It's like, I thought I was ready.
That's funny.
All right. So real quick. So I do have a handful of other questions, but I also want to be respectful of your time. I know we only booked you for 30. So, if you, okay, no worries. Let's see. Last question. Oh man, which one do I choose? Okay. This is the last one. So as a US based investor who isn't accredited, oftentimes we're blocked out from participating in pre-public launches where really you can hedge a lot of your risk in getting into projects. What advice, if any, would you give us to try and tackle that or try and not miss out?
Yeah. So that's a really tough thing, right? Because it's hard for me to give actionable advice that doesn't involve me advising people to circumvent securities laws, right?
True.
So in a sense, like,
I saved this one for last.
I'm aware that there are people who are finding mechanisms of circumvention, but like, far be it from me to advise people to do so. To me, like, you could move. That would be legal, right?
True.
Like, you could,
second citizenship, maybe.
Right? You could go to like Portugal or something, but like, I would say like, to me, like, obviously, like, I have to kind of advise people to take routes that, preserve regulatory and legal parameters.
Of course. Yeah. I don't know why I thought you'd have a secret bullet. Like I've looked at creating an investment DAO through Syndicate. Again, that whole securities thing where I would have to be accredited. Everyone who participates would have to be accredited. I mean, I'd like to be a legal enterprise, but anyhow.
I mean, if you're doing it at scale, there's always kind of the development of offshore corporations. So, I mean, that's absolutely a possibility, right?
True.
Yeah, I mean, obviously these things are kind of like, things that you might have to invest into. So.
Hire a lawyer. Yeah.
Yeah, exactly.
All right. I'm going to cut it, Miko. I want to be respectful of your time. This was amazing. Again, thank you so much for hopping on. You gave us a lot to look into, research, and hopefully improve.
Yeah, I appreciate it. And, if you found it entertaining, like feel free to stop by my show. It's called Miko Bits, MIKOBITS. And, hope to see you.
Also, he has a Spotify podcast, so make sure you check that out too, guys.
All right. Appreciate it. Thanks so much.
Thanks, Miko. Bye.